So here's a bunch of people right now on Twitter saying, it's a top, it's a top, it's the end of the bull market, because they've all got PTSD from last time. But when you look at the ISM survey, it's currently still at what, 49 or 48, still below 50. So it hasn't actually started the upcycle of economic growth. That will all happen in 2025. But the real issue I've got with MicroStrategies is the leverage it's building elsewhere. And what happens with leverage in a 70% volatility asset is when you're going to blow some people up. Happens every single cycle. I think in a bear market, its stock is going to get absolutely trashed.
Today, we have Real Vision CEO Raoul Pal giving us his updated prediction for crypto, how the upcoming cycle will be different, and why he says MicroStrategy is in big trouble. With crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. Former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months, and why this year, more than ever, we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
I'm very curious. What are your thoughts on Michael Saylor's his strategy with his stock and Bitcoin? I'm just curious, like what's your thesis? Do we see that happen in like 10 or 20 years with other chains?
Yeah, I don't think there is. What he's doing is using the fact that Bitcoin is deemed to be pristine collateral, which is actually a term that I coined back in 2020. That's what he is doing, and he's found a way to find infinite demand for it, because what he's doing is giving a bunch of hedge funds free money. So hedge funds being free money and driven by getting paid at the end of the year, they will take that trade all day. So a lot of people look at MicroStrategies and say, well, it's going to blow up. I'm not so sure MicroStrategies will. Yes, I think in a bear market, its stock is going to get absolutely trashed, and it will go below the implied value of the Bitcoin it holds. And the reason being is because there's a bunch of 2x long ETFs, and they will extra liquidate, so there won't be enough liquidity. But the real issue I've got with MicroStrategies is the leverage it's building elsewhere. So there's a bunch of hedge funds buying these converts, and then the options are very cheap in the convertible bond. The convertible bond is like a bond with an option on the stock. They're super cheap, like 50% underpriced. So that's free money because these guys can trade the option or hedge the option or do stuff. There are other people who are using the premium of MicroStrategies to trade long long Bitcoin, short MicroStrategies. It's just creating lots and lots of hidden leverage within the system. And what happens with leverage in a 70% volatility asset is when you're going to blow some people up. Happens every single cycle. And somewhere, because of this billions and billions of dollars of leverage that MicroStrategies is creating within the market, somebody is going to blow up big time. It's more like the packaging up of these loans and selling them to other people. So it's not the real estate itself. It really is who owns the loans.
The mortgage crisis kind of thing.
Exactly. And that's exactly what's happening here. And I've seen this 1,000 times before. This is the financial markets is a repeat of this endlessly. Excess leverage gets built up. Something knocks over the dominoes. In the end, somebody fails or a whole group of people fail. We get a complete cleaning of the system, and then we start again. So that was last time. Don't forget, there was one borrower in the entire market and nobody realized it. It was 3 Arrows Capital. They were doing so much arbitrage that they had borrowed all of the money from everybody and they brought down everybody from Genesis to BlockFi to Celsius to you name it. It was all one counterparty. But we don't know yet. It's so opaque. Nobody ever realizes this stuff until it all happens, that there's only one person and has got way too much risk on. So here's a bunch of people right now on Twitter saying, it's a top, it's the end of the bull market, because they've all got PTSD from last time. But when you look at the ISM survey, it's currently still at what, 49 or 48, still below 50. So it hasn't actually started the upcycle of economic growth. That'll all happen in 2025.
Embracing an unyielding enthusiasm for the crypto realm, Raoul confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Pal reassures that a long-expected surge awaits. Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
I think the Fed will continue to cut rates, and that's okay. But really, it's down to the US injecting liquidity to weaken the dollar and jawboning it lower. Because if the Fed come in or the Treasury come in and say, we believe in the strength of the dollar, but it's too high for growth right now, whatever, that's enough to turn market participants nervous. And then all you need to do is inject liquidity through various mechanisms to force that to happen. Don't forget, we got a $700 billion drain of the TGA to come as well. We've just drained the reverse repo. So they're going to have to stop QT as soon as they finish the reverse repo, which will be by kind of Feb, maybe. So then you're ending QT, injecting liquidity from the TGA. They've already mentioned, I think it was Powell at the last Fed meeting said, we don't want to have to tighten liquidity on the rebuild of the TGA. That was a signal that everyone missed. He said, we understand draining the TGA is liquidity into the system, but we don't necessarily want to tighten again once we have to rebuild it. So that's telling me it's probably QE. Now, maybe it's not QE, maybe it's QE by a different name, but I think they all know the game. But I think because Trump is actually a good negotiator, a good deal maker, he will try and get some early wins. And so he'll get some early wins in exchange for the dollar, that whole idea, and then say, if it doesn't happen, we're going to keep increasing tariffs. So there'll be some sort of ongoing stick to beat them with to try and readjust these deficits. So yeah, I think it won't be as big as people expect. That's what happened last time as well. It takes time.
Pal's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Pal also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. As an investor, Pal has made many diverse moves, with crypto in the primary position in his portfolio. Technology ranks as the second fastest horse, yielding significant returns, proving that his strategy is a recipe for success. Emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.